Can you talk to us about the new fund offering that you have? How is it different from the regular plans in the market?
So we are launching now top 250 Nivesh Yojna. This particular fund actually has a unique structure. It will invest 35% of the collected AUM in large cap stocks, another 35% in mid cap stocks, and the remaining 30% we will distribute depending on where the valuations look more attractive. So a minimum of 35 in large cap and a minimum of 35 in mid cap will where the investment go. Looking at the market, we took the opportunity that this is perhaps the time when the market valuations are looking attractive, particularly more so in the mid cap space, and therefore we think that may be a good time for people to invest in this.
So, when we talk about the fund offering, of course, it's a differentiated product. But can you just tell us about the tie-up with Manulife? How does that help? What's the overall MF plan at the company?
So in June of this year, we announced joint venture signature with Manulife, which is a global fund house headquartered out of Canada in Toronto, but also has its fund management expertise headquartered out of Boston, where in the United States they are better known as John Hancock. But for us, the big benefit that we are looking forward to once the joint venture gets approved by SEBI is that we're looking to get expertise from a more than 150-year-old fund house that has got expertise in managing all kinds of assets, not just equity and debt. They are very big managers of real assets across the world. To us, establishing a new institution in India, which is committed to going into smaller, deeper markets, resonates well with the Manulife's also stated philosophy of going into neo markets. And their expertise that has been collected over all these years, including in Asia, where they have in really small markets, they're selling funds in really small markets of even $1 ticket size. So they have a lot of expertise, not only of customer insighting, but also clearly of managing equities, managing fixed income, and more so managing risk in small markets. So we're looking to benefit from all this expertise as we grow the business into the deeper, smaller markets of India.
That's the first part about it, that how does the tie-up help? But of course, M&M is also something which does not need any introduction here in India. How will M&M's research capability help? How will M&M's distribution capability help in the existing business?
So as we are building out the research part, it's interesting that the approach we are taking it is we are differentiating it from the fund management part. We are keeping the two separate. The research analysts will probably run their own model portfolios or shadow portfolios, and in a sense work alongside the portfolio managers to see that their portfolios are actually challenged sometimes with recommendations, so that there is a good equation built between the research part and the fund management part. But where our distribution capability is concerned, clearly the parent company of Mahindra Asset Management is Mahindra Finance, who has a really large and deep, well-established capability of reaching out to millions of customers that it has built over 25 years. We are hoping to leverage off this. As it is, as we speak, we get money already from over 400 cities across India, which I think for a company as young as ours is a new sort of thing. Usually people wait much longer to do this, but we just have a commitment and reach to go out and reach customers who are not initiated in the mutual fund market before. We are probably adding new customers here, and we'll continue to do this because there is a lot of angst in investors in smaller markets about where to put their investment, and we are trying to find that and leverage off Mahindra Finance's distribution to some extent to build the reach.
Can you talk to us about the team that you have set up so far, and how important in this distribution would also be digital?
Right. So we have in total now about 160 people. Mostly, of course, these are the distribution and sales people. We operate from 60 of our own locations. Many of them are co-located with the Mahindra Finance offices, but some of them are unique. And out of these people, they are reaching out to trying to reach out to 400 cities today. As we go forward, we believe that even in these 400 cities, the quantum of depth that we can create will be much more. Most of the people who are coming from smaller cities are trying out mutual fund through one SIP or the other. For them to make a stronger and a longer commitment, it will take time, a lot of education. We are investing in that. We were the first fund house who started by reaching people in their own languages. For example, if you see the names of our funds, you will find an element of vernacular, because we just reasoned that if people don't understand something in their own mother tongue, how will they even want to buy it? So we are taking that kind of an approach of reaching out to people. That's really how we are going to work out.
Just a word on the markets. You said that the mid cap, small cap side of the market is looking good. How would you rate at valuations at this point of time for the markets? Where would you put the mid cap, small cap space versus the large cap? Also, if you have any view, a lot has been spoken about the polarization in the Nifty.
So I'm glad you said that. In fact, when it comes to valuations, so 2 years ago, if you recall, in February of 2 years ago, when the mid cap market fell off the cliff, I think we observed the statistical trends on the market, we looked at the valuations, and we came to the conclusion, well, these are markets that have approximately a 3.5 year cycle of bounce back. And I think we are approaching near the end of, or beginning of that 3.5 year bounce back, particularly in the mid and small cap space. By itself, if you see in the last 3 months alone, the mid cap index might have risen about 12-13%. Pretty much the large cap has also risen about a similar number. Small cap, I think, is yet to participate. But where valuations are concerned, although the large cap is looking like, the index is at beyond 40,000, there's really a polarization story there, isn't it? I mean, there is a small number of stocks that are taking the index forward. There is a large number of stocks that are still to participate, and the valuations still look very good even there. So we think that when we build a portfolio of large and mid cap stocks in this top 250, there is opportunity to find good value both in large cap and mid cap today.